figures suggest more than 1/3 of young people are spending much higher proportions of their income on rent.
Almost a quarter of mortgage holders considering selling up because they just can't afford these higher mortgage costs. But even probably more shocking than that is that a tenth have already done so.
Hello there, fellow explorers of the world. Today, we are embarking on a journey that touches all our lives, whether you're a potential homeowner, an aspiring investor, or just someone curious about the shifting tides of the UK property market.
Could the steep falls happen here in the UK? Newspaper headlines are frightening, pointing out Britons have less equity in their homes than Americans, that prices here rose faster, and interest rates are much higher.
Picture this: understanding why property prices are on a captivating rollercoaster ride and how it might impact your future, your neighborhood, or your very own dream home.
And time to buy homes. And while a recovery in the property market is still a long way off,
we are about to unravel the mysteries behind these changes, unlocking insights that could shape your financial decisions and the future of the UK property landscape. So join us, because this isn't just about property. It is about the fascinating forces that are shaping our world today. But there is even more if you make it to the end of this yet another captivating story of the world around us when a singer unfolds. First of all, is it bad when prices fall? In the economic sense, that is a straight yes, because most of people's wealth is in assets, including houses or homes, and not solid cash. But you cannot know so much if you don't watch this whole video. The good thing is, I am here delivering, meaning that all you have to do is to watch and, of course, listen. You see, the UK real estate market has a long and rich history, dating back centuries. For decades, it was one of the strongest markets in the world, with prices rising faster than incomes. Recently, however, a potential downturn has begun to emerge as property prices fall in some areas and demand shifts due to changing economic and political conditions. In the early days, real estate ownership was reserved for the wealthy and privileged, which meant that owning land was considered a symbol of power and status. Over time, the real estate market evolved and became more accessible to the general public with the rise of the middle class and the expansion of mortgage lending in the mid-20th century. In the 80s, under the leadership of Prime Minister Margaret Thatcher, the UK underwent a major shift toward a more market-oriented economy. One of the most significant changes was the privatization of public housing, in which millions of homes were transferred from public ownership to private ownership. This shift, combined with a surge in demand for real estate and low interest rates, led to a real estate explosion that lasted over a decade. The real estate market is not immune to economic turmoil, however, and as a result, has experienced some ups and downs over the years. In the early 90s, a recession led to a drastic drop in the market, and prices fell over by 20%. Since then, the market has recovered and continued to grow. But it has also faced new challenges, including the impact of the global financial crisis in 2008, the COVID-19 pandemic, and now the ongoing uncertainty associated with Brexit. When examining the factors behind the current downturn, it is important to keep historic context in mind and understand how the UK real estate market has evolved. Over the past 70 years, the average house price in the UK has increased by 365%, even on an inflation-adjusted basis. Over these 7 decades, various factors have influenced the market in several ways across different business cycles. So, in this video, you'll learn about the history of the UK housing market, what happened to it, and why. Allow me to give you a brief historical overview of the UK real estate market over the past few decades. In this overview, we will focus on the main historical events or market changes that have affected prices and demand. I think it's best if we start in the 80s, as this was when a more significant change was taking place and Prime Minister Thatcher's government was ruling the UK. This was also a time when the UK was undergoing a significant shift towards a more market-oriented economy, as home ownership became a real goal after the Thatcher government introduced the right to buy scheme as part of the 1980 Housing Act. This gave people the opportunity to buy their social housing at a heavily discounted price, and in 1988, the average discount was 44%. Privatizing council houses affected millions of homes, as I mentioned earlier. Public ownership was becoming a thing of the past as private ownership took over rapidly. In 1980, the average house value was just over $23,000, and by 1983, average prices had risen to over $27,000. Fast forward to 1985, when prices exploded even further. The average home started going for an impressive £34,377. From a financial perspective, both the 80s and the 90s recorded growth in mortgage lending as it became easier to secure a mortgage due to strong confidence in the country's economic growth that continued to push up house prices. The early 90s saw a recession that led to a sharp downturn in the market, with prices falling over 20% in some areas. 1993 was the year when the UK saw one of its biggest recessions since World War II. But almost 3 years earlier, in 1990, the average house price had reached £57,683, yet it was going for £51,210 in 1993. Later in 1996, the market recovered, and the average home was selling for £53,394, having risen from just under £51,815 in 1992. However, interest rates were still on the rise in general. The late 90s saw the market beginning to recover, but it was still sluggish. The new government initiatives such as the introduction of Help to Buy schemes helped to stimulate demand. Interest rates took a dramatic dip from 1997 to 1999, averaging an all-time low of 5.5% during that period. This also coincided with a change to interest-only mortgages from 1996 onwards, making it easier to borrow money and pay less of your mortgage than it was before. Unfortunately, that was when things started going wrong for many people who had borrowed large amounts of money from their homes. In 1988, interest rates went up and stayed at an average of 15% until 1992, resulting in one of the biggest house price increases recorded at that point, with homes selling for an average of £51,405 that whole year. That was a lot of money back then. I mean, even today. But do you know what doesn't cost any money? Subscribing to this channel. The downturn was exacerbated by high interest rates and a lack of mortgage lending. 2002 saw a mini property price boom, as average house prices reached £106,000, an increase of 18% on the previous year, 2001's price point of about £89,000. This was partly due to growing confidence in the tech sector. At the time, companies welcomed high recruitment activity that resulted in a quick expansion of the country's property market, a move that brought about an influx of workers seeking accommodation closer to their workplaces. And in the aftermath, demand exceeded supply. In other words, during the 2000s, the market began to pick up steam, with prices rising steadily. As house prices continued to spike, they pushed a large proportion of British householders out of home ownership, with many renting for the first time in their lifetime. In 2006, house price inflation peaked at over 14%, following the credit crunch and the global financial meltdown of 2008 that caused a sharp downturn in the market. Prices fell by up to 20% between January that year and May the following year, according to ONS, which is a non-ministerial executive office of the UK Statistics Authority that reports directly to the Parliament. From there, it became harder to obtain a mortgage because the average UK house price in 2008 stood at 168,000 after the introduction of buy-to-let mortgages that made it easier for people to invest in property as a source of income. The 2010s saw the market moving towards recovery, with prices rising steadily. To be more specific, housing market started to recover in 2012, and the average house price rose to 193,000. The government-backed Help to Buy scheme was introduced in 2013, which aimed at injecting some life back into the property market and boosting house building. The scheme enabled buyers to purchase brand new properties with a mortgage of 75% of the value of that property, leaving buyers needing to find a cash deposit of only 5%. These then new government included policies were aimed at stimulating demand, while including Help to Buy scheme, but also stamp duty reforms. The UK property market was in 2015 mixed with increased buyer demand and a reduced supply of available properties, as well as rising inflation and interest rates. However, that year saw a reduction in the net total house sales, which was primarily attributed to fewer first-time buyers entering the market. One of the biggest changes of the housing market would emerge later in 2017. It was then that the government announced the elimination of stamp duty for the first-time buyers purchasing a property of up to £300,000. House prices were already increasing by a little over 3% over the year to January 2017, with the average price in England at that time being £209,000. Amidst all this, there came the uncertainty around Brexit, which led to a slowdown in the market. In some areas of the country, house prices bounced off the Brexit unpredictability towards the 2019 wrap, which was at least 1.4% higher than at the beginning of that same year. According to the National Building Society, which is a British mutual financial institution, the average property price in the UK stood at over £215,000 during 2019. Now, in the 2020s, do you remember the time when everyone was staying inside because there was a deadly virus outside? The COVID-19 pandemic had a major impact on our lives, but also on many markets. As the global economy suffered, there was another sharp downturn in prices but also demand, despite COVID-19 hindering the economy throughout 2020 and the property market closing for several months. The government and the central banks took measures to stop the property market from crashing by introducing temporary layoff payment plans, stamp duty holidays, and a ban on tenant evictions. According to the country's public sector information website, gov.uk, house prices increased by more than 10% during 2021 towards March, up from 9.2% in February, meaning the average property price in the UK passed £231,000 in that year. In 2022, things didn't look good either, as average house prices in England increased by 7% over 12 months towards January 2023. This means that the average house price in England is over £310,000 since January 2023. And for those in Northern Ireland, where this went over 10%, things are even worse. In this overview conclusion, we can confidently say that the UK property market has experienced significant fluctuations over the past few decades, driven by a range of factors including economic conditions, government policies, and other global effects or events. While it has been a much stronger market historically, recent trends indicate that it is entering a new phase of uncertainty and change. Now that you know so much about the UK property market's long history, I think it is best to have a second short overview of the current state of the market. First, let's take a look at house prices. In recent months, there seems to be a relief according to the new data from the UK's Office for National Statistics. The average UK house price increased by almost 9% in the year towards Feb 2021, reaching £250,000. The organization's report added that some areas of the country have seen a fall in prices recently if you focus on urban areas. Second, demand and supply. While the UK property market experienced high levels of demand in 2020, this has been fading ever since, and sharply in recent months, with the supply of homes for sale also falling. Studies find that this is partly due to abolition of temporary stamp duty holidays, which provided a significant incentive for buyers. Next, the UK property market is still facing ongoing economic uncertainty, with concerns about Brexit's raising unemployment followed by the current inflated cost of living that has caused protests in some areas and the ongoing COVID-19 pandemic effect. All this makes numerous buyers and sellers adopt to wait-and-see approach, further dampening demand and supply. Fourth, the pandemic and its aftermath have also led to changes in buyer preferences. Now, many people are interested in properties with outdoor space, home offices, and more flexible living arrangements. This alone brought a shift that pushes buyers away from urban areas to suburban locations. Last but not least, we can look at the rental market. The rental market has been impacted by the pandemic and other related factors. But with falling demand in many regions, a decline in rental places has emerged. This trend has been taking over most of the urban areas where there is a high concentration of short-term lets, for example in London. At this point, you have heard about stamp duty, and I think we should have a more thorough understanding of this term, since it also affects the UK property market with significant damage. Stamp duty is sometimes referred to as property tax, meaning taxes buyers must pay when purchasing property above certain values in the country. The rates at which stamp duty is valued differ depending on the worth of the property and the type of buyer. For example, if you are a first-time buyer or not, such changes in stamp duty rates significantly influence the UK property market. Take this as an example. In July 2020, the government increased the country's stamp duty threshold to £500,000. Although it was temporary, there was a surge in demand for properties and a spike in transaction volumes. This was due to buyers being able to save money on stamp duty, with some estimations suggesting that the move led to savings of up to £15,000 for some buyers. On the other hand, when the government raised stamp duty rates for second homes and buy-to-let properties back in 2016, that action brought about a decline in demand for this type of property and a subsequent fall in prices in several areas. This was because buyers were required to pay an additional 3% stamp duty on top of standard rates, making such properties less attractive to investors. In terms of government policy changes, there are many examples of how these have impacted the UK property market in the past. For example, changes to mortgage lending rules in 2014 led to a decline in demand for higher value properties as buyers were required to put down large deposits. Similarly, the introduction of Help to Buy scheme in 2013 also led to an increase in demand for brand new properties as buyers were able to access government loans that played big at covering buying costs. You see how government policy changes affected the UK property market, with changes to stamp duty rates and mortgage lending rules being the most important factors in particular. By keeping up to date with these policy changes and understanding how they affect demand and prices, buyers and sellers can make more informed decisions about when to enter the market. With or without help, the UK property market is still facing a range of challenges and uncertainties, with various areas experiencing a downturn in prices and demand. However, there are also opportunities for buyers and sellers who can adapt to these changing market conditions and even take advantage of lower prices in some regions. Another problem that continues to challenge the UK property market is oversupply. When there is an oversupply of property on the market, it means that there are more properties available for sale or rent than there are buyers or tenants. I guarantee you that this alone can create several challenges for the entire market. Challenges like price reductions. In an oversupplied market, sellers are often forced to lower prices to attract buyers, which is a terrible move because it can lead to a decline in property value, but also send bad signals to a wider market. Second, reduced demand. An oversupplied market brings about a reduction in demand because buyers tend to become overwhelmed by the number of properties available, and then find it difficult to make the right decisions, something that continues to depress prices and slow down the pace of transactions. And last but not least, increased competition. With more properties on the market, sellers and landlords in the UK face increased competition from other properties of the same area or price range. And whenever this happens, properties take longer periods on the market, but in some cases, it brings difficulties in finding tenants or buyers. For property developers, an oversupply of property can lead to financial difficulties, mostly if they have built too many properties that they cannot sell or rent out. In such circumstances, UK-based property developers struggle to cover their costs, whether it's paying off workers, paying off materials, or repaying loans. This lands a huge blow on the construction sector. We all know that if developers are unable to sell or rent out properties, their money won't return as expected, which means they are less likely to invest in future construction projects. The last important issue that I cannot forget is something that I hinted at earlier in this video, and it is none other than shifting buyer preference. There are baffling questions on this too when it comes to understanding how it negatively influences the UK property market. In other words, how are changes in buyer behavior challenge the UK property market. Changes in buyer behavior have challenged the UK property market since it has the potential to influence demand for certain types of properties and, of course, locations. Recent changes in buyer behavior included a preference for smaller homes, moving away from city center properties, and increased focus on environmentally friendly properties. One of the key drivers of changes in buyer behavior was the advent of the COVID-19 pandemic. With more people working from home, there has been a shift in demand away from city centers to homes in more rural areas. Most buyers are looking for more space, both inside and outside their homes, as well as access to green spaces. This also explains why there has been more demand for properties in suburban and outside city regions, but also the reason why many properties in these areas are receiving multiple offers and are selling out quickly. Another trend is the preference for smaller homes. This has been intensified by my recent mention. We realize that there is an increased focus on environmentally sustainable homes, but also desire for more affordable housing. For more buyers who are now looking for smaller homes that are more energy efficient and require less maintenance, this trend has become their most popular alternative. However, it is particularly common in urban areas, where properties with small footprints and low running costs are in high demand. In addition to the growing interest in environmentally friendly properties, most buyers in the UK are looking for homes that use sustainable materials and have a low carbon footprint. This is the reason behind the increasing demand for eco-friendly properties, such as those with solar panels, rainwater harvesting systems, and efficient heating and cooling systems. All this informs us on how changes in buyer behavior are changing the UK property market by shifting demand away from traditional property types and locations. So if you are in the market, I want you to know that there are implications for sellers and developers who need to adapt to this unfaithful space that requires investors to allocate their money to properties that meet the evolving demands of buyers. In this video, we examined the UK real estate market and addressed many reasons for the current downturn and the impact on buyers, sellers, and developers alike. We also looked at the impact of COVID-19 pandemic on the market, changing buyer behavior, oversupply, economic uncertainty, changing interest rates, and what? Do you remember? And government policy. I hope you enjoyed learning some of the historical events that have impacted the UK real estate market in recent decades, including the 2008 financial crisis, changes to stamp duty, and the Brexit uncertainty. Despite all the challenges this market presents, there are potential solutions and opportunities for growth. For example, developers can position themselves for success by adapting to changing buyer behavior in focusing on developing properties that meet the changing needs of buyers. However, this alone is not enough. It is also important that policymakers take effective action. I know that effective measures such as reducing stamp duty and investing in infrastructure in high-demand areas will help ensure that a market recovery is on the horizon. In summary, the UK real estate market still faces significant challenges, but With a combination of adaptation, innovation, and policy changes, there are many opportunities for growth. I encourage you to share your thoughts and experiences in the comment section below. Speaking of leaving the EU, you can watch this next video that answers the question if Brexit was a bad idea or not. Thank you for watching. I'll see you again soon.